Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. Definitely want to give some props to Riz for taking over last week. I really appreciate it. I was at an event with a friend. A friend of mine asked me if I could go. We compete together, and yeah, we won, which is always good. But glad that we made it back today. But any case, we are back at it here. We got a brand new week worth of market data, and man, everybody was freaking out on Friday or Monday, weren't they? I mean, it was just like, what's going to happen? The market took an absolute dump on, Delta variant, on inflation numbers, and everybody is thinking the sky is falling. And well, we saw how that worked out on Tuesday through Friday. Nothing but green skies for the market. We did dip out of my channel just a little bit. We hit the 50 moving average, bounced off of that convincingly, and have been nothing but up ever since, and making a new market high, new high for the S&P 500 on Friday at 44.11 and 80 cents. Closed just a little bit below that, moving into the close on Friday, but massive green days in a row here. Kind of shows you that, maybe things are not as bad as people once thought. I mean, everybody was saying, okay, here it comes, right? Every time the market turns over a little bit, everybody's like, okay, here it comes. This is the market crash, guys. This is when it's all going to go downhill from here. It's been going up for too long. Yeah, you tell me how that's working out for you. Because this looks like an absolutely amazing up channel to me. And, the market just does not want to quit. Now, that being said, one of the things that you'll note on today's webinar is, usually we do like 2 or 3 tickers that we're potentially looking at to possibly enter later this week. You aren't going to see any of those this week because there are not any that we are watching. Right now, everything is ridiculously overbought, and we don't want to get anybody stuck holding the bag by buying at the top and, just not being able to utilize your capital. And I think this is one of the biggest, most difficult things to grasp when you're trading, is that we don't need to be making moves every day. I know that it's really tempting, and you may be on Instagram and things like that, and you're looking and you're seeing like, oh my gosh, well, this dude's taking this trade and getting out this trade and this, that, and the other, and in and out and in and out. And you think that's what trading is about. Sometimes you just got to hold. And that's really the truth. And, it's not as flashy and exciting as sometimes we want it to be. But for true wealth accumulation, to really start building your account and making your money work for you, not the other way around, then sometimes you have to be patient. And that means not taking trades. I think that's something that, people get confused. Like, oh, well, patient just means like if it's going up, I just need to hold on to get more gains. And that's part of it as well. But patience sometimes is understanding when maybe now is not the right time to buy. Maybe now is just the time to hold and wait and see what happens. Because like I said, right now, pretty much everything that we are looking at is in overbought territory, and the worst thing you want to do is be getting in at the top like a certain other security that we'll talk about here before we get out for the day, and then you're just stuck holding something for months and months and months, and it's nothing but a boat anchor on your account. So you're going to see a lot less trades from us right now. That is for a reason. It's not because we're trying to be like, haha, we got you, now we're not posting trades anymore. It's because we're trying to protect your capital. And that is something that I think a lot of people may not understand. And you're like, well, I joined this trading channel and you're not trading. No, we are. We have our positions that are open, that we've had open for some bit. And, we are going to just hold on to those and see how they go. And then when, the time is right, we'll close them, take profit, and then look for new opportunities. But right now is not the time to be buying. After 4 green days in a row, it is not the time to be buying, because you risk getting caught in another dip, kind of like what happened here, and then you're going to be crying that your portfolio's red. Whereas if you would have just held what you had and maybe not gotten into new positions that were risky, that were overbought, that maybe were not the best setup, but it's going to keep going, right? It's just going to keep going up and up and up, and it'll never stop. Yeah, That doesn't necessarily always happen, guys. So I just wanted to give you kind of a little primer on that, and understand that right now what we're doing is mostly defensive trading, because we're concerned of another, another pullback here on the market. And when that happens, if we get some of these securities that are overbought into more reasonable positions, where an entry is more feasible, then yes, we will definitely go ahead and take those. But we're not going to force trades. And that's what you see a lot of other quote unquote gurus doing on the internet. Trading just for the sake of trading is really not what we're about. We're here to grow our accounts. We're here to make money in the market. And sometimes that means you just got to chill and wait for the right opportunity. We'll touch on that a little bit later. Let's keep going. Let's take a look here at the breakdown for the S&P 500 for the year. S&P 500 just steamrolling here, almost 19.5%. So currently sitting at 19.29% on the SPY. We have a couple underperforming sectors right now, which would be healthcare and utilities, though healthcare is making a push here to try and get up there. But I mean, look, all sectors are up for the most part over the last 4 days after that quick little dip. Utilities still just kind of down here in the doldrums, still up almost actually 7.5%. Healthcare up 16.4%. Tech is finally starting to push into over the S&P 500 area. I think Apple has a lot to do with that. I will bring up Apple here a little later. Up 20.8%. Financials, energy, and real estate all just steamrolling, and real estate taking over here, a huge dive in energy. We'll take a look at oil here in just a minute, and you'll see that with this rollover in oil that we've had. And real estate now the top performing sector in the S&P 500 at the moment. Talked about that rollover in oil. Here it is with Delta variant fears. Everybody freaked out, thinking that airplanes weren't going to be flying. And if that's not happening, then less oil is being consumed. And so, oh my gosh, demand for oil is going to decrease. We need to stop buying as much. And everybody kind of came to their senses. Looks like we closed here on Friday at 72. Oops, I moved my mouse. There we go. $72.07 per barrel on crude oil. Really holding here at the current high that we've had this year, which is 76.88. That has been the top pretty much. We have not pushed over that. And oil grinding pretty much higher since $60. We got to 76, and that has been kind of the top at the moment. So we'll see if that holds there. I suspect we'll see some consolidation here. This is definitely a nice rebound, and if you did take that UCO call that Riz posted in the options trade, you're going to be pretty happy about that. Very, very nice recovery here in oil. And it was a risky play, but obviously very calculated, and Riz knows oil like the back of his hand. So that was a pretty safe call, if you ask me, but you never know. In any case, it worked out very nicely for us. So hopefully if you took that trade, you were able to get out with a profit on that. My prediction for oil, I think we'll see consolidation this week. I think there's going to be kind of a wait and see mentality as far as that's concerned, especially with, Delta variant numbers, with potential new mask mandates, things like that. I think we may see just kind of a bit of a hesitation on oil here before we decide to pick a direction. Gold has bounced beautifully off of this support level here around 1765, and that definitely held very nicely after this bit of a rollover here, consolidation, and pushing back up. Now, we did come to the 200 and the 50 moving average, push back down off of that, closing on Friday right at 1801.30 per ounce. So gold still pretty overpriced in our minds at this point. We're not looking to get into gold anytime soon, but definitely pulling back a little bit here after this nice little rebound here off of support. Now, I told you about buying something in the top, hoping, or rather, theorizing that it would never go down. And we come to cryptocurrency, aka Bitcoin. So my reference there was people who were buying Bitcoin in the 60s and now are kind of like, well, now what do I do with this hunk of trash because it's worth half as much as it was when I bought it? That being said, crypto, in Bitcoin specifically, really holding here on support at 30,000. I put this horizontal line exactly at 30,000, and really holding on to that really tight. But we have come up here to the 50 moving average. We'll have to see if that does provide any type of resistance or if the buying of Bitcoin continues. But yeah, I mean, huge loss here in Bitcoin. You know, we topped out here around 64, and then we pushed all the way back down to 34. I mean, it lost $30,000 per coin in the span of a few months since looks like about mid-April. So, you know, sometimes we have this idea that, oh my gosh, this is the new hottest thing since sliced bread. It's never going to go down. And then we buy at the top, and then we end up having to hold for quite some time after it lost half of its value. Now, you know, if you were a crypto enthusiast, how much happier would you be if you would have gotten into Bitcoin around the 30,000 area as opposed to buying it at the top? I'm pretty sure you'd be pretty happy, you know, getting in at that level. But be that as it may, we are not in any cryptocurrency positions right now currently in Riz International. It's not something that we're currently trading. I know Riz did it quite a bit back in the day, but now we've kind of moved away from that for the most part. And we do keep an eye on it because it is, you know, definitely something that people are trading right now. So we want to keep an eye on it and see what people are doing and how it's behaving. But yeah, right now, Bitcoin in a pretty harsh downtrend. Though looking like it wants to make a bit of a recovery here. We'll see how today and tomorrow hold, and the rest of the week for that matter, as we take a look at Bitcoin. All right, so we took one trade this week. I want to talk about it real quick here, and that would be Zillow. So let me zoom this out a little bit here. Zillow, of course, the reason that most people think that their house is worth at least 50,000 US more than what it actually is. You know, a real estate website, things like that, is a, you know, a real estate group that, you know, sells and advertises different real estate. Really nice bounce here off of this 100 level. I will tell you that that is a big psychological level. You know, when you get to 100, either when you're coming back down to it or when you finally push over it, as far as the security is concerned, huge amounts of orders are going to be coming in and going out. Now, I've told you this before about whole and half dollars on the intraday charts, but on, you know, the daily chart, I can tell you with absolute certainty $100 per share is a huge psychological level, and I mean huge. Beautiful bounce here off of 100. And let's see, let me pull up on Discord here and give you the exact time and date of entry. So we got in on the 20th, right here, in at 107.85 and looking very nice so far. Now we are running into the 40 moving average here, the 50. And that is causing us a bit of problems, but I would say overall, this one's still looking pretty solid. That's a nice bounce off 100. If we can push up here a little bit further, maybe make this push towards around 119 or so, then I think it would definitely be a good place to go ahead and exit. I know that's profit target 1, but in this market, I think taking profits quicker is going to be the path to success. So Zillow looking very good. If you did take this trade, keep an eye on it here moving into this week, especially on Monday. Let's see what it does, how it behaves, whether we do break this, you know, momentary bit of consolidation here after the push up towards the 50, and then we will go from there. I want to go ahead and open it up to questions now. I got a question before the webinar. We had, let's see here, Larry wanted me to look at NRXP, NRX Pharmaceuticals. Okay, bullshit biotech stock, got it. And that's exactly what this is. Okay. So this is technically not a penny stock, but looks like it used to be. Yeah, looks like it used to be pretty hardcore and has seen a lot of movement here over basically 2021. Now, huge amounts of volume coming in here. My guess is this is clinical trial results. That is usually something that happens. Let's take a look here. Is there anything? There we go. On the 23rd, is that when we started getting movement? Yeah, so they validated their first commercial intravenous formula for their drug, SOAR pre-market. Well, no kidding. So yeah, if you're looking to trade this, don't. That's my advice. You missed the boat is really what it comes down to. I don't foresee this continuing. This point of intersection here that you can see between the 200 and the 90 is going to be fairly significant. And these volume spikes here are pretty indicative of, you know, clinical trial news and things like that. I don't foresee this continuing. This is a BS biotech stock. I don't like it. If you know the fundamentals a lot better than I do, again, these are standardized earnings results. Yeah, I don't like it. I think you missed the boat. If you take this when you're buying and you're potentially holding for a very long time and you may never see your entry price again, I would be incredibly, incredibly careful with something like this. You're like, well, it could go up to here. Yeah, it could. It could also go back down to here, back to, you know, sub $10, which is where we were just a couple days ago. And so, you know, yeah, I don't like this one, Larry. I'll be honest with you. I've done. Oh, I forgot to turn the chat on for our attendees. There we go. Everybody can see what who's talking and who's typing. Yeah, Larry. Yeah, I think I would steer clear of this one, brother. I really do. I think that the move's probably happened, and I think at this point you're chasing if you take this one. And on a stock like this, this is the stuff that wrecks accounts, guys. I've seen so many people blow their accounts up on tickers like this. You know, these penny stocks, you know, that they were penny stocks, and don't kid yourself, that's exactly what this was. And, you know, suddenly get some like clinical trial and it has positive results, does crap like this. Then we get, you know, this approval for this drug and it does this, and then it just kind of goes back down. So yeah, I would pass on this one. Okay, Matthew wants to know, should I average down on INTC? What's your entry, Matthew? Earnings were good. No, that's not what I want. Where's the news? Here's the news. You know, I think the problem, obviously, that we're having, okay, so 57. Okay, they missed earnings, even though it says here that they beat. Okay, so this is one of the dangers, guys, of TradingView. Sometimes they don't get these numbers correct. So a miss on earnings is obviously not a good thing. I'll be honest, I'm not too surprised, especially with the chip shortage right now. Obviously, that's going to hurt chip makers pretty bad. So I don't know if we're in average down territory yet. If it looks promising on Monday, if it looks like we may recover, you could try and get in then to maybe average down a little bit. I closed my Intel position quite a while ago, at least a week ago. When Riz got out, I got out for like $2 profit. Woot. Intel just not making the move that we were really hoping for when we got back in somewhere in this area, if I'm not mistaken. Really just kind of was a non-mover and really just consolidating sideways. Now with the earnings miss, I would hold tight. You know, we could see the dead cat bounce here. You know, when we have these negative earnings, we could also see it go a lot lower. I have seen some of these that, you know, they miss earnings and then just keep grinding lower and lower and lower as there's more selling going on. So if you're looking to average down, you may have a better opportunity here in a couple days. And that might be the better option for you. If it looks like it wants to rebound here really hard on Monday, then if you want to try and jump in and add a few more to see if you can get out at a better price, then that's definitely something you can do. I don't know if we're going to make it back to 57. I mean, it's going to take a little bit of time. It would need a pretty big catalyst to make it back to 57 really quick. So one of those things where you may just have to hold on to it for a little bit. Okay, BK, for potential long or still too much of a downtrend to make this viable. Let's take a look. Bank of New York Mellon Corporation. I typically don't trade financials just because they're not too spectacular in my opinion. I don't know this one. I'm not too familiar with this one, to be honest with you. Looks like it's running into resistance here on the 50. Okay, yeah, I thought Intel beat. I thought that's what they said. Perhaps Outlook was, Outlook, or what do they call it? But yeah, it looked like Intel beat, so I was a little confused by that. Oh, don't worry about it. Don't worry about it. But yeah, if if people think that Intel is overvalued, you know, the consensus may be that the company is overvalued at that point, even when they beat earnings. If they're looking at their future outlook, their expectations for what's going to be happening in the future, and they're like, okay, it's not going to be as good as we thought, then it's not too surprising that we see that selling, even though they beat. You know, that has been a trend that we've kind of seen for a while. And it's one of those things that doesn't make a whole lot of sense, because you're like, well, they beat earnings, it should go up. Doesn't necessarily always work that way. So I would hold tight on that. You know, if you know if the chip shortage starts to alleviate a bit, then we definitely could see stocks and chip makers like that start to push back towards the north side, which would be nice. But I would hold tight on Intel just now. If you're in it, hold on to your butts, as Riz likes to say. And let's see what it does. Let's see if we can find a more solid floor, because right now we're basically trying to knife catch, and that's never typically a good strategy. All right, back to BK, Burger King, otherwise known as the Bank of New York Mellon Corporation. Yeah, this one's a tough one, because we're kind of stuck between two areas right now. We're stuck between the 50 and the 90, and it's a good question on what way it goes. Now, if you're holding this, looks like ex-dividend is the 26th. That's never a bad thing, right? So that's Monday, so you kind of missed the boat unless you're holding that already. And yeah, I mean, it's still in a downtrend technically. It does look like it's trying to break out, though. I mean, if you really like this one and you want to get in, I would look at it north of the 50. If it can hold over that, then I think we should be in good shape. That being said, it's tried that before and it came back in. Again, this looks like earnings were positive. Yeah, earnings were decent. So, yeah, I mean, the thing with financials is sometimes they really move slowly, though this one seems to like to move a bit. Yeah, if we can get over the 50, I like it a bit better. Okay, let's see here. Okay, Cube and Store to take advantage of real estate momentum. Let's take a look. Oh boy. If you take this one, it's a straight up chase. I'll just put it to you that way. We're extended here. It's been going nonstop since last August. I mean, look at this. This is nuts. Okay, so let's see here where we broke the 200. Plus 67% in a little over a year. That's pretty impressive. That's very impressive. So yeah, this one's a bit of a chase. If you want to take it, you can. I'd just be a little careful. Don't go in full size on this one, because this is looking like it needs to kind of pull back a little bit to maybe get you a better entry. If you do take it, just understand that it is a chase, and you know, if you're okay with that, then you're fine with it. STOR, Store Capital. This one, this one a lot less crazy. Here's the Corona crash here and the recovery. This one I'm not super excited about because it doesn't look like it moves all that much. We do have some hard level support here around this 36 to 37 area. Doesn't seem to want to break out of there. And let's see. And nothing back there. There's two relative. Yeah, this one I'm not as keen on. I just, it doesn't seem to like to move all that much, and I think that's my thing. Looks like we really are having a hard time getting here over like 36.70. That seems to be some hardcore resistance there, and so I mean, I guess if you want to confirm a breakout, we need to close over that, and that would be my recommendation there. Okay, MU Micron. This is a favorite here in Riz International. We've traded this many times. Okay, do you think now would be good re-entry for MU? No, we're below the 200 at this point. We're in a clear downtrend at this one. I would be very hesitant jumping in MU right now. You know, listen, I've been in Airbnb for quite some time. I've kind of learned my lesson buying stocks that are on a downtrend. Yeah, I would be I don't like it. Personally, I don't like it right here. I feel like there may be some more downside, especially with all these chip makers. And yeah, I don't like the reentry here. Thoughts on averaging down on Airbnb? Since I brought it up, right? Let's talk about it. So here's my downtrend that I've been following ever since that I got in this. I can't remember where I got in, probably somewhere in this area here. I think I'm in around like 151. Obviously hurting pretty bad here at 138. Averaging down on this one will depend on your account size and how comfortable you are holding this longer term, because we really need to bust out of this downtrend, and it just doesn't seem to want to do it. That's really the thing that I can say about it right now is it just doesn't want to do it. It's really holding on to this downtrend really hard, and it doesn't want to break out of it. It's incredibly frustrating because, okay, you're only in half position, so fair enough. I know from my account, which is, you know, very small, probably compared to most of you, yeah, I don't know if I can really afford to average down on this one. So I'm in for a whole whopping 1 share, but I'm also down about $20 per share. So yeah, it's kind of a bummer. We were expecting it to bust out of this consolidation phase here. It didn't. And I don't think anything, you know, surrounding travel and things of that nature is going to be a really great, you know, thing to maybe consider right now. So I would be really careful on averaging down on Airbnb. If you have the capital to do it, it's definitely something you can consider. But man, I really wanted to get out of this downtrend. It's driving me crazy. All right, BGFV. Big Five Sporting Goods. This is another one that's in a downtrend right now. I'd be very careful buying this. You know, we kind of rebounded here off of this magic level of around 20. So that's basically just a psychological level that we have. This one looks like, okay. Not familiar with this company. Let's see here. I mean, yeah, we've had a really nice run here, and we've come back down, and we're bouncing off of this psychological 20 area. I don't know. Like I said, me personally, I'm not buying a stock that's in a downtrend again because it feels like a knife catch, and I think that's exactly what this is. So if you think that it's going to hold above 20 and you have a lot of conviction as far as that's concerned, you could definitely go for it. It's currently sitting below the 90, which is a little troublesome. The 90 not super relevant, but it's something that I've seen that has some, you know, support and resistance there. It did close below it. Let's just say I would rather see it close above it and then the following day continue on its move up before I would want to take this one. Interesting security. Obviously, we had a very nice earnings report here. Yeah, that's a big beat, isn't it? So they got rewarded for that, and now it's started coming back down a bit here. And yeah, not too jazzed about this one. It's something you can keep on your radar, and you know, definitely something to watch. But I don't know if I would be super jazzed about jumping in on this one. Oh, Adam, I hear you on that one. Trust me, I would be very happy to get out of Airbnb at break even right now. Should we go long on Open? Well, let's take a look at Open. I'm not familiar with that name. Open Door Technology. Nope. Nope, nope, nope. Not touching this, guys. Not at all. Yeah. Yeah, that looks pretty decent right about there. Not touching that with a 10-foot pole. This is what, former penny stock crap? I don't know. We had our IPO in June of 20. All signs point down on this. This is a knife catch. If you want to take this one, it's a complete knife catch. Now, if you understand that and you're okay with that sort of thing, taking on that risk, yeah, it's a garbage company, then I would not even consider it. Yeah, I think Riz is probably right on his assessment there for that. I would not touch this one, bro. I would be very careful. If you want to take this on a speculation, you can. Just understand that that's exactly what it is, and only risk what you're willing to lose. I'm not saying it's going to zero, but it doesn't look good. I'll just put it that way. So interesting ticker, but yeah, I don't think I would touch this one, bro. If you're trying to grow your account, this is not one I would be looking at. Thoughts on AEI average down after the share offering? This one, all set eHome International, or are you looking at something else, Adam? This one? So I'm guessing this was the offering here, if I had to guess. Either that or here, one of these two. A lot of volume here on this day, so it's probably this, if I had to guess. Friday after hours? Okay. Doesn't look too hot to me. Again, we're sub $10, so this is technically a penny stock. Also a very recent IPO as well. Just came out in February this year. Looks like we had some malarkey happen here the first couple weeks, and then it kind of came back down to earth. And if I don't know what you're in this for. Okay, it was a YOLO play. Gotcha. Well, you know, that's kind of one of those things when you play YOLO, sometimes you get burned. And that's something that I think we all need to remember. Sometimes it just doesn't work out. I personally would not take this if it had a new offering that, especially when the stock price is this low, is not typically something good. You're in somewhere around 590. So yeah, somewhere in this range here, probably in that string of candles there somewhere, if I had to guess. I don't know, buddy. I don't know if I would continue to dogpile on this because you may just you may be losing more on a play like this. There is sometimes, guys, when you just have to cut your losses. You know, especially on YOLO plays and things like that. If it doesn't work out, sometimes you just need to eat the loss and let it go. And I understand that, you know, sometimes, you know, though psychologically we're like, well, it should do this, it should do that. You know, we should get this type of volume, and it just doesn't happen. And we get kind of suckered into holding longer and longer and longer. Okay, as long as you're in small, that's good. Okay, you're not selling that, that's fine. You don't have to. But, you know, there comes a time when you just need to let it go. You need to ELSA that stuff, and you just need to let it go and eat the loss and be able to utilize the capital somewhere else. And that's, I think, the big thing when we have to eat a loss like that. It's more so that, you know, we just need to admit sometimes it wasn't the right play. And I understand psychologically that can be difficult, and you know, it definitely hurts to take that loss, but you know, we can hold some of these positions ad infinitum and they will never get back to where they were, especially a YOLO play like this on essentially a penny stock. This is why we typically don't do a lot of these types of trades, because more often than not, they don't work. And, you know, it's different if you're holding, you know, something. Here's another one that I'm holding that I'm currently red on. Something like Corsair, which actually is a fundamentally pretty decent company. You can tell I'm holding it because of all the lines, by the way. But yeah, I mean, pretty decent numbers as far as the fundamentals are concerned. Earnings have been good. Most of my gear that I have here on my computer is Corsair stuff, keyboard, mouse, you know, things like that. I've got a lot of their components in my build, my computer, my PC. Hell, the case is a Corsair case. And you know, it's one of those things where it's just kind of frustrating when you're holding a good company like this and it just keeps losing and losing and losing. There's a difference between holding a company that actually has solid fundamentals and holding a YOLO play until it dies. And so just be aware of the difference and understand that sometimes, you know, it just doesn't work out. Let me go back to AEI here. I mean, okay, you know, if you want to look at the positives here, we can look at the positives. we are somewhat, we do have some ascending support here. So, you know, it's not completely dead. I think if we break below this, it's not going to be good. I'll put it that way. But I mean, as far as good news is concerned, it does look like we are trying to push back towards the north side. So, you know, I'll give you that much. It is looking okay there. But if we have another candle that looks kind of like this, it's not going to be good for it, guys. I'll just be straight with you on that. So be very careful with this one. Yes. Any advice on holding Wish? Well, if you're writing covered calls and you're making money on it, there's no, you know, issue continuing to do that. Now, obviously, Wish was a short put that got assigned. So I know that a lot of you are in on this long and you're like, okay, when am I going to be able to get out of this garbage? And yeah, it kind of sucks. But the thing is, if you're writing covered calls and you're collecting that premium, you're reducing your cost basis every time you get a hit off of one of those weeklies that you write. And it doesn't get assigned, it doesn't get called away, you're making more and more premium on it. So the more premium they make, the less, you know, your cost basis is as far as holding those shares, to the point where it actually can become profitable for you. So, you know, if you're writing covered calls and you're making money on it, dude, just keep rolling it. I understand that, you know, sometimes, you know, these short puts and things like that, they don't go the way we want. We have some bull crap like this where Wall Street Bets gets a hold of it and, you know, pushes it, and then eventually it just kind of craps out, and we're like, okay, well, when are we going to be able to get back here to the point when we got assigned? The answer is I don't know. But if you are writing covered calls and you are collecting premium, bro, just keep that train rolling. That's my opinion, Mike. I understand it sucks because you've got a lot of capital tied up in that position right now, but the more you write, the better off it is. And then, you know, eventually if you have another black swan event and they do get called away, more than likely your strike price is going to put you either at break even or in the money. And then if that's the case, then all of those other, you know, covered calls that you collected on, you basically just put them in your account as free money, which, you know, I'm all about free money. I don't know about you. But yeah, I know a lot of people are in the red on this one and it sucks. But if you are able to write covered calls on it, which you should if you got assigned, then, you know, it's free money eventually whenever you get out of it. Or if you just write enough covered calls, eventually it'll cover your position and you'll be where you started, and you'll still be holding those shares. You continue to write covering calls on it and make more and more money. Thoughts on Tesla heading into Monday's earnings? Let's take a look. Oops. Tesla apparently has somewhat come back down to earth. We have not split again like we did way back when in this area here, when it kind of went a little nutty. You know, as far as EVs are concerned, I mean, long term, listen, I think long term, a lot of countries are going to start pushing for more and more EVs and EV usage. Obviously, we have a tax rebate here in the United States if you purchase an electric vehicle, where the government basically says, hey, you bought an electric vehicle, here's a check, which doesn't suck. But the thing is, more and more car manufacturers are pushing towards EVs. Whereas before, when Tesla was like the forerunner, you know, obviously they had more of a market share in the EV market. Now, of course, you know, Elon Musk has his other projects like SpaceX and things like that, and they're doing interesting things there for sure. But Tesla's the big one. I will say I'm not overly impressed by other EVs and the character and the you know, the goodies that they have when you compare them to Tesla. I've been in a Tesla with the self-drive component. It's freaking ridiculous, guys. I mean, it is absolutely amazing. I want one. I know Riz is going to hate it when he hears that, when he listens to the webinar replay. But, you know, eventually I want to get one myself, because I was thoroughly impressed when I was in that. A friend of mine has one, and it was a ride, let me tell you. Now, one thing about earnings, we have no idea, right? Ryan, this is the thing. It's like what we saw with Intel earlier, right? So Intel beats, but, you know, there's something there, whether it be their forward outlook, you know, or something along those lines, like, well, yeah, we beat earnings, we're doing good, but we're not as good as they want us to be. We're not as good as the market thinks we should be. And then everybody sells it and it dumps. when it really, logically speaking, shouldn't. Like earnings are good, the company's doing good, and right now it's just kind of sitting between the moving averages. Tomorrow, Monday, when earnings hit, those moving averages don't mean nothing. I'll tell you right now. Especially on earnings day, there'll be more volume than normal, I would say. But as a company and with the product that they have, I like it. I know Riz doesn't, and that's fine. But playing earnings is very tricky, and we tried very many times to try and find a strategy that would be profitable playing earnings, and we simply couldn't. It's basically a coin flip. I'll tell you right now, it is a coin flip. How the market interprets the data, how they interpret the earnings data and the forward outlook, and there's no way that we know how that's going to happen. So overall, long term, I like Tesla. If it could get down a little bit cheaper, I would like to buy a share of it and hold it. Would I buy it going into earnings to try and get it to rip or dump? No, I'm not. Earnings are incredibly volatile, and it's all about interpretation. It's all about how the market interprets the data. And what is the market? The market is all of us, anybody who trades on the market and who is trading Tesla. And they're looking pretty solid as far as their volume's concerned, right around 20 odd million shares per day. It's been a little bit less going into earnings. I would say, looking at a trend like this, it looks like it is being sold off a little bit into earnings. So, maybe it's one of those things where people are exiting their positions before earnings happens, and they want to see how it behaves after that and then make a move from there. Could also be, just a lot of anticipation that maybe they think earnings are not going to be as good, especially with the chip shortage and things like that. I know a lot of automakers are getting hurt by that right now, and the cost of automobiles is going up currently because of that. I know, because I just had to buy one. And Tesla may be getting hit by that as well, and their earnings may not be as good as people want them to be. So maybe, this selling is like, okay, let's go ahead and take our profits or exit our positions now, and basically take that loss towards our our tax write-offs if you're able to do that, and or just take profits if they're in the profits, and then wait and see how Tesla reacts to earnings on Monday. So my guess, if you said, okay, Chris, you have to make a guess, I think it's going to go down. That's my guess. I think only for the reason that there is a chip shortage and that automakers are suffering because of that. I think there's enough psychological information there that it'll push Tesla towards the downside. That's my guess. That being said, now that I've said that, it's going to gap up. It's going to open at 750 on Monday because of the earnings results, because that's usually what happens. That's a joke, of course. But if you're pointing a gun to my head and say, okay, Chris, pick one, up or down, my vote's down. Awesome questions tonight, guys. Thank you, everybody, for coming out. Really appreciate it. We've been at it here for about 45 minutes, so I think that's enough for tonight. I don't want to keep you here any longer because you all have a weekend too, and I want to respect your time. So thank you, everybody, for coming out. I really appreciate your participation in Elite as well as here on the webinars. It's great having everybody. So happy to be back at it again with you doing webinar. And as always, we will catch you in Discord on Monday.